Bitcoin has just finished a capitulation signal that most people will completely miss. Not because it is hidden, not because the data is private, but because the signal does not look exciting when you first see it. It is not a giant green candle. It is not even a breaking news headline. It's not a billionaire standing on a stage saying that Bitcoin is going to go higher. It is one number, minus 0.35. And according to that data, this video is going to be built around that reading on the aggregated realized profit and loss ratio. It marks a 43-month low. Now, the last time that Bitcoin saw this kind of realized loss pressure was during the post-FTX capitulation phase. Now, that matters because, historically, this is not where the crowd feels confident. This is where the crowd feels exhausted. This is where the short-term holders, they start questioning everything. This is where people who bought the breakout suddenly become forced sellers, emotional sellers, or silent sellers. And yet, if history is any guide, then this is also the part of the cycle where the market often does its most important work, quietly, painfully, before most people notice. So the question is simple. Is Bitcoin breaking down? Or is this exactly what a bottom looks like before the next major move begins? Okay, so to understand why minus 0.35 matters, we need to step away from the normal chart for just a moment, because price alone only tells us where Bitcoin is trading. It does not tell us what investors are feeling when they sell. Now that is where realized profit and loss comes in. When coins move on-chain, analysts can estimate whether those coins have moved at a profit or a loss compared with the price that they were last changing hands. If more coins are being sold at a profit, well, the market is usually in a healthier, more confident state. Right? People are taking gains. They are distributing strength. They are selling into demand. But when realized losses dominate, well, the story, it changes. Right? That tells us that coins that are moving below their previous cost basis. Right? People, they are not taking victory laps here. They are accepting the pain. They are saying, I cannot hold this anymore. And that is why capitulation data can be so powerful, because market bottoms are rarely formed when everything is calm, right? They are formed when the last group of weak hands give up. Now, a fall to minus 0.35 does not automatically mean that Bitcoin has already bottomed. No single indicator at least has that kind of power, right? But it does tell us something very specific. It tells us that the market has entered a zone of extreme realized stress, right? A zone not seen for 43 months, a zone last associated with one of the most emotionally damaging moments in recent crypto history, the aftermath of FTX. And that is kind of where this story starts to get darker, because the market is not just reacting to the price. It is now reacting to memory. The FTX collapse was not just another crypto headline. It was a trust event, right? It broke confidence across the market, right? It forced people to question exchanges, counterparties, lenders, funds, influencers, and even their own judgment. Now, Bitcoin did not just fall because a company failed. Bitcoin had fallen because the market suddenly realized how much hidden risk had been sitting underneath the surface. Now that is what capitulation does. It reveals who is overextended. It reveals who is using leverage that they could not carry. It reveals who said that they were long-term, but only meant long-term while the chart was green. And when realized loss data reaches extreme levels during that post-FTX phase, it captured something that price could not fully show. It captured surrender. Not just theoretical loss, but real loss. Coins moving at pain. Now, investors, they're accepting the damage. The market, that's the market making the point where fear, it stopped being just a headline and became a transaction. Now that is why this current signal matters, because when the aggregated realized profit and loss ratio falls back to levels not seen since that era, it raises a serious question. Are we watching a fresh breakdown? Or are we watching the same kind of emotional clearing event that historically appears near the end of major corrections? Because bottoms are not born from good news. They are born from bad news at least when the bad news stops working, right? They are born when selling pressure hits the tape, but the market refuses to collapse the way that everyone expected. And that is the part that most casual viewers are going to miss, right? They're going to wait for certainty, right? The 1%, they're going to look for the exhaustion. So here is my question for you, right? If this signal last appeared near one of Bitcoin's darkest moments, do you see it as a warning sign or as evidence that the worst selling pressure may already be happening? You can let me know your thoughts in the comments down below. Now, we need to talk about the group that's feeling the most pressure right now. Short-term holders. See, these are the people who have entered more recently, right? They may have bought the breakout. They may have bought after a strong run. They may have believed that the correction would be shallow, fast, and easy. Then the market changed character. Suddenly, the trade that felt obvious, it became uncomfortable. Right? The chart has stopped rewarding patience, right? Every bounce, it started to look weaker. Every red candle felt personal. And when Bitcoin trades below the cost basis of new buyers, something important happens, right? The market starts testing belief. Not long-term belief, but short-term belief. And there is actually a big difference. You see, long-term holders often have years of context, right? They have seen crashes, they have seen recoveries, sideways markets, exchange failures, regulatory fear, ETF debates, minor pressure, macro panic, and pretty much everything in between. Short-term holders, though, do not always have that scar tissue, right? So when they fall into paper losses, many of them start looking for the exit. Right? They do not sell because Bitcoin's long-term thesis has changed. They sell because their time frame has changed. And they thought that they were investing, right? Then the drawdown turned them into traders. Then the fear turned them into sellers. Now this is why realized loss spikes can be so revealing. They show when unrealized pain becomes real. They show when people stop hoping and start acting. And that is where the market begins separating two groups, right? Those being shaken out and those quietly staying anchored in, right? Because while short-term holders are often the ones realizing the losses, long-term holders tend to behave differently during these phases. They are not immune to fear, right? They are not emotionless machines, but they are anchored to a different price, right? A different time frame and a different understanding of what Bitcoin is. And that difference is the heart of this story today. Long-term holders are not magic. They can sell, they can panic, they can misread the market. But historically, they are the group that matters the most when Bitcoin is testing a correction low. Why? Well, it's because they control a major portion of the supply that does not move easily. See, when long-term holders stay firm near their realized cost basis, well, they actually create a kind of emotional floor in the market. And it's not a guaranteed price floor, of course, it's just an emotional one. They are saying through their kind of behavior that this is not where we leave. And that matters because Bitcoin is not just a price chart, but it is a network of holders with different levels of conviction, different entry points, and different reasons to even be here. Right? A short-term holder may see a 20% drop and think that the trend is dead. A long-term holder may see the same move and think that we have been here before. Now that is why the divergence between short-term holders and long-term holders is so important. Like the short-term holder, they see the pain. The long-term holder sees a test. The short-term holder is watching their entry price. The long-term holder is watching the structure of the cycle. And when realized losses reach extreme levels, while long-term holders remain anchored in, well, the market begins to form a very specific setup. Right, weak hands are being flushed out. Strong hands are not rushing to give up supply. Now, the crowd sees damage, the data may be showing transfer, coins moving from impatient buyers to patient holders. Now, this is one of the most uncomfortable truths in crypto and Bitcoin. Right, the market often needs pain to reset. It needs excess optimism to be cleared out. It needs late buyers to be tested. It needs leverage to be punished, and it needs the story to feel broken before the next serious chapter can begin. Now, I do have to just pause here for a second to let you know that I'm not a financial advisor. Right, this video, it is for informational and educational purposes only. Right, the crypto market, it is volatile and you could genuinely lose everything that you've invested. So it's very important that you do your own research because at the end of the day, your money is your responsibility. And with that said, let's go back into the data here, because this is where the minus 0.35 reading becomes more than just a number. It becomes a psychological map. Most investors, they talk about capitulation like it is dramatic. Right? They imagine one giant red candle, one final crash, one terrifying wick. And sometimes, yes, it can look like that. But other times, capitulation is slower. It is quiet. It is a grind. It is weeks of frustration. It is people checking their portfolios less often. It is confidence fading one day at a time. It is the same question repeating in people's heads over and over. What if I am wrong? See, that is the deep dark hole of every Bitcoin correction. Not the price drop itself, but the doubt, right? Because doubt is what turns a long-term plan into a short-term reaction. Doubt is what makes investors sell near the same area where smart money starts paying attention. Doubt is what makes people ignore data that would have helped them, because emotionally, they are already exhausted. And this is exactly why realized profit and loss data is actually useful. It strips away the performance. It does not care what people say online. It does not care what sounds confident. It tracks the behavior, right? Are coins moving at profit or are coins moving at a loss? And right now, this ratio is at minus 0.35. The answer is clear. Loss is dominating. Pain is being realized. But here is the twist. That does not always mean that danger is increasing. Sometimes it means that the market is finally clearing the pressure that has been building for weeks or even months. So think of it like a storm. The scary part is not always the moment that the rain starts. Sometimes the scariest part is the pressure before the storm breaks. And once the pressure releases, conditions can begin to change. Not instantly, not cleanly, but structurally. And that is the possible revelation here. Bitcoin may not need everyone to become bullish again for the bottoming process to begin. It may only need the forced sellers to finish selling. So here is my next question for you. When you see extreme realized losses like this, do you think that it means that Bitcoin is in deeper trouble, or do you think that it means that the market is finally clearing out the weak hands? You can let me know your thoughts in the comments down below. So, what is the truth that only the 1% know? Well, it's not that every capitulation signal is going to guarantee a bottom. That would be too easy. The truth is that the best signals often look terrible in real time. By the time that everyone feels safe, the opportunity has usually changed. By the time that the headline turns positive, the market has often already moved away from the deepest fear. By the time that the casual buyers return, the people who studied the pain have already made their decisions. Now that is why this or minus 0.35 reading, it actually matters today, right? It tells us that Bitcoin is not in a normal emotional zone. It tells us that loss taking has actually reached an extreme level. It tells us that the market is revisiting a kind of stress that was last seen around the post-FTX collapse and capitulation period. And it tells us that the split between short-term holders and long-term holders may be the real story. See, short-term holders, they are under pressure, right? Some are realizing losses. Some are being forced out by emotion. Some are discovering that buying Bitcoin is easy, but holding Bitcoin through a correction is something else entirely. Meanwhile, long-term holders appear anchored around their deepest cost basis. They are not reacting to every candle in the same way. They are looking at the cycle with a wider lens, and that is where the big picture really comes in. If this ratio begins to recover, at least to recover from these extreme lows, and the price stops making lower lows or new lows despite the heavy realized loss pressure, then that would be very important, because it would suggest that sellers are losing power, not because the news suddenly became perfect, but because the market may have already absorbed the panic. Now that is how bottoms often form, not with a celebration, but with exhaustion, not with certainty, but with doubt, not with a clear announcement, but with data that most people ignore until later. So, where does that leave us going into the 14th of July, 2026? Well, it leaves us with a market that looks weak on the surface, but far more interesting underneath, right? The aggregated realized profit and loss ratio falling to minus 0.35 is not a small detail. It is a major stress signal. It places Bitcoin in one of its deepest realized loss phases in years. But stress is not the same as collapse, and capitulation is not always the start of a disaster. Sometimes it is the final stage of a correction, the moment where the people who cannot hold finally sell to the people who can. Now, that does not mean that Bitcoin has to rocket higher tomorrow. It does not mean that risk is going to disappear. It does not mean that the market cannot test lower. But it does mean that we should start to pay more attention, because when a signal last seen during one of Bitcoin's deepest periods returns, well, the easy reaction is fear. The smarter reaction, though, is investigation. What is being sold? Who is selling? Who is holding? Is price confirming panic or resisting it? Are long-term holders breaking or staying anchored in? So these are the questions that really matter, because Bitcoin's biggest turning points rarely feel obvious while they are actually happening. They feel confusing. They feel uncomfortable. They feel like the market is trying to shake out everyone who needed certainty before that they could act. And maybe that is the real lesson here, right? The 1% do not win because they never feel the fear. They win because they study what fear does to everyone else. So when you see minus 0.35, do not just see a negative number, right? See a market that's under pressure. See short-term holders being tested. See long-term holders being measured, right? And see echoes of the post-FTX capitulation phase. And see the possibility that Bitcoin may be closer to the end of this correction than the crowd wants to believe. Because the truth about capitulation is simple. It never feels like the bottom when you are standing inside it. It only looks obvious after the market has already moved on. For now though, if you want to do me an absolute solid favor, make sure to smash that like button, subscribe if you are new, and check out the video that is queued up on the screen. I will see you all over there.